So Ethereum has, in a sense, become the de facto bank for ICOs and for scams, which sucks. What is going on, guys? Welcome back to the Traveling Crypto. Hope you guys had a good weekend. Let us get right into it. The main topic for today that I wanted to discuss was Ethereum. A while back, I made a video talking about why Ethereum is free falling. And this is back when it was at decent pricing, but it definitely was free falling a while back. And I was saying that in terms of a technology, Ethereum is great, right? The smart contracts platform is something revolutionary. It's something that I feel like will be the norm in the future, especially in situations where transactions are the main source of one's business. Now, whether that's Ethereum or a better smart contracts platform that is built in the future, I don't know. But the point is, smart contracts are, I believe, going to be a thing of the future. Now, dollar value wise, Ethereum to me was in a very precarious position. And this is why. This is what I talked about before. And I was one of the people that, end of last year, beginning of this year, I thought that Ethereum might end up being the number one cryptocurrency, that the flippening would happen. However, as I started realizing that ERC20 tokens are basically, anybody's mom can create an ERC20 token, exchange that for Ethereum. And if you are an ICO, don't even have to be a legitimate one. You can essentially just hoard ETH, selling your token, your ERC20 token, get ETH in exchange, and then dump it on the market for either BTC or fiat. And that's essentially what people are doing. So Ethereum has, in a sense, become the de facto bank for ICOs and for scams, which sucks. If you look at on CoinMarketCap today, you'll see that we have 1,800 cryptocurrencies. I mean, this is creeping up without anybody really paying attention. And I guarantee you that most of the new ones created are creating ERC20 tokens. This number was at 1,600 for a while. It crept up to 1,700. Now it's 1,800. BTC dominance continues to grow. And even though we have more cryptos coming into the market, the overall market cap is just tanking. Now, imagine that's the case on NASDAQ or New York Stock Exchange, where, you create basically 10% more public companies than exist today, or there are 10% more public companies traded than exist today, yet the market cap of the overall market keeps dwindling. And this is obviously because these projects are mostly useless. I hate to say it, but that's what it is. And Ethereum, unfortunately, is at the backbone of this process because, again, you can create an ERC20 token, exchange it for ETH, and you have now millions of dollars worth of Ethereum that you can dump on the market at any time. So in terms of a tradable asset, or let me just say an investment, I was pretty bearish on ETH for a while. Now, from a trading standpoint, if you're a day trader, yes, you can obviously trade the swings on ETH. However, we haven't had many swings in a while. I mean, we haven't really had a positive uptick in Ethereum since April. So even trading swings would be tough on Ethereum. So for speculators, it's a tough coin to trade. For investors, to me, it has no value until there's some sort of ICO regulation process or whatever. And from a technology standpoint, it's solid, but we all know, especially in crypto, fundamentals don't really translate into price. So looking at Ethereum right now, it's just free falling. It seems like, it's never ending on the RSI bottom, that there's really no bottom it can go to. It's trading, well below the lower band on the Bollinger Band. It's currently at 286. If I told you 3-4 months ago that you would see a sub 300 ETH, you would have thought that I was crazy. Now, I didn't say that, so I'm not going to say that I predicted the price, but I thought that Ethereum was going to be losing value because of that relationship it has to ICOs. Now, let us look at BTC real quick. On BTC, I drew this possible head and shoulders pattern, which is still valid, but we do have to extend the right shoulder in order to accommodate these new candles. And the reason that I thought we could dip further was because of market sentiment. If you look at the shorts, we are now at a peak that almost matches that which we saw back towards the end of June. And when you see a peak in shorts, that tends to precede price, meaning that price will take a hit as shorts peak. Price might take a hit And then you get into a scenario where a short squeeze might be in play, thereby seeing a spike right after the peak in the shorts. But the price has to decline first in order for that to happen. So that is still in play. That might still be the case. As you can see on the RSI, we still have a little bit more room to decline. The stochastic and the MACD are showing negative momentum at the moment, and we are definitely trading on the lower band of the Bollinger Bands. If we zoom out real quick, you'll see that really since January, we're still in this descending triangle pattern. Again, these patterns can break and will break. It just depends on whether they fail, break to the upside, or whether they are confirmed and we see a break to the low side. Now, we always say that BTC drives the market. However, the top cryptocurrencies, the top 5 cryptocurrencies, all have an effect on each other. So Ethereum could essentially, the drop in Ethereum could essentially bring the entire market down, because now the market sentiment is very pessimistic, because, you know, seeing a sub 300 ETH wasn't something that everybody expected. So Ethereum can actually have an effect on BTC and the whole market. It's not just BTC driving the market. Yeah, BTC is the anchor. It's the digital gold, if you will. However, you know, an unexpected drop in Ethereum or an unexpected drop in Bitcoin Cash can also have an effect in the market. So this can also affect BTC's imminent price. Might not affect it for the long term, but it can affect BTC's imminent price, and we could see another drop on BTC. That is why I'm staying away from trading Bitcoin at the moment until I see some sort of confirmation that there is a identifiable trend. Right now, we are teetering between, you know, 6,100 and 6,400. However, it's really swingy within that range, and there isn't a sign that it will break out in either direction. It's rather tenuous at the moment, right? It's on shaky ground. So I'm staying away from trading BTC at the moment. You really don't need to be in a trade all the time. As a matter of fact, if you take a look at my portfolio, and this is currently my portfolio, you can go to the travelingcrypto.com/my-crypto-portfolio, and you could see my portfolio updated at any time. So I'm mostly in Tether at the moment. I have a small position in BNB and a small position in XLM. XLM is, you know, doing well considering the market. It's probably one of the most consistent performing alts at the moment, considering the major bear market that we are in. Actually, we are more so in a depression, really. So I want you guys to understand that cash is also a position. Sitting on the sidelines is also a position. You don't always have to actively be trading. With that said, sign up to the Patreon if you want to get access to the trade alerts and the weekly crypto picks. Looking at Ethereum Classic, we have dropped about 25% since the coin was listed on Coinbase. That's not unexpected. People were taking profits. I mean, you could see that if I just erase this real quick, you'll see that the incline was almost identical to the decline. It's a mirror image. It's like a symmetrical image of each other. Here's the incline and here's the decline, almost exactly mirroring one another. So it's not surprising that people, you know, bought ETC, Ethereum Classic, in order to take advantage of the Coinbase listing, and then took profits shortly thereafter in the same manner that they bought Ethereum Classic. Now, in terms of news, there is something that really wasn't reported. I don't think that much, and maybe for good measure, for good reason, because I think that if most traders knew about this or investors knew about this, it might have brought the market tumbling even more. But Coinbase Pro halts BTC USD trading services on their platform. This was over the weekend. This was 3 days ago. I think this happened on Friday, I believe. August 10th. I think that was a Friday. So I actually had to dig for this story. I heard about it, but it really wasn't at the forefront of most crypto news. And a lot of traders are speculating that Coinbase had a hand in manipulating the market. They halted the BTC USD trading pair on purpose so that a panic selling situation wouldn't occur. Now, I don't know if that's a tinfoil hat conspiracy or if that is the case, but I do know that their explanation did make sense. And basically what they're saying was that there were liquidity issues with Coinbase Pro, specifically with BTC USD on Coinbase Pro. Now, liquidity risk is something that occurs when a stock or an asset cannot be sold, or a commodity can't be sold because there isn't any liquidity in the market, meaning there are no buyers that are willing to fill all of those sell orders. And so Coinbase Pro basically said that that was the case. Initially, they said there was an issue with the trading pair, and then they came out and said that there here you'll see it says Coinbase announced that the BTC USD order book did not have the sufficient liquidity which was required to enter the limit only mode. So there was liquidity risk that occurred on this exchange with the BTC USD trading pair. Now, I'm surprised that this hasn't happened first on some fringe alts where you see no volume and there really doesn't appear to be much liquidity. This is the first major liquidity risk issue that we've heard in crypto in a while. But I would think just from common sense that liquidity risk is something that we'd see a lot more often, especially since, back to CoinMarketCap, we have 1,800 cryptocurrencies. So I would think that we'd see this more often, but I guess not. So maybe it's good that this wasn't reported really at the forefront of the crypto sphere, but liquidity risk is a real issue, and the dwindling market cap does match up with this story and does speak to it. So, we are in tough times right now. And again, I just want to stress, please don't trade any money that you need liquid, that you need ASAP. Do not trade any more money than you are willing to lose. Don't overextend yourself. Definitely don't borrow money just to put into the market. Yes, buying the dips is really important. That's an easy way to make money in any market. However, we are in a really tenuous spot right now. And as you saw from my portfolio, I'm not making that many trades at the moment. That is a perfectly reasonable position to be in. So anyway, join for the trade alerts and the weekly crypto picks. Join the Discord for interesting crypto discussions. And that's probably the easiest way to get a hold of me. Like and comment if you got anything out of this video. Obviously, subscribe if you're not already subscribed to the channel. Stay safe out there. Peace.